something just snapped in the market, and no, it was not a crash. Keys moved plus 22.50%, while Nasdaq Composite finished up 1.10%. That's the kind of tape where someone with size is making a statement. Tonight we answer one question: real trend extension or a very expensive fake-out? In 10 minutes, we decode breadth, expose who actually got paid and punished, and map the events that could flip the... Okay, speed round. 1 minute, no fluff. S&P 500 up 0.79% to 6892.26. Breadth stayed supportive instead of relying on one mega-cap pocket. Quietly constructive, the kind of grind that frustrates dip waiters. Nasdaq Composite up 1.10% to 22876.20. AI-sensitive growth stayed in demand while valuation pressure eased. Buyers were pressing the gas pedal, not tapping the brakes. Dow Jones up 0.74% to 49,166.39. Cyclical participation confirmed risk appetite beyond software and semis. Quietly constructive, the kind of grind that frustrates dip waiters. DXY sat at 97.50, up 0.15%. No dollar tantrum, no forced risk dump. USD JPY printed 155.78, up 0.77%. Higher levels pointed to persistent carry demand. Story of the day starts with a fake-looking rally that didn't fade. Traders came in expecting digestion after recent highs, and instead, the tape kept finding buyers. Setup. Nasdaq climbed 1.10% and keys ripped 22.50%. That's not defensive hiding, that's capital chasing growth with conviction. Conflict. Everyone knows this only works while rates behave. Treasury yields stayed contained. If yields had jumped hard, this would have cracked. Confirmation. S&P added 0.79% and Dow added 0.74%. For once, not just 5 megacaps doing all the lifting, and volatility cooperated. VIX at 1965, down 6.47%. That's the market saying, panic later, insight. Money paid up for evidence and clipped names with uncertainty, which is exactly why EXPD got hit. Implication, this regime is tradable, but fragile. If breadth stays broad, dips get bought. If leadership narrows back to a tiny clique, the party gets awkward fast. First trigger. Tomorrow, WED, Feb 25. Conference Board Consumer Confidence, 10 a.m. ET expected, 87 to 91. A beat could validate today's rebound. A miss risks reopening the growth scare that drove Monday's sell-off. Second trigger. Then, WED. Feb 25. Fed speakers. Barkin and Musalam. Dovish tone helps risk extend. Hawkish pushback could quickly tighten financial conditions in headlines. Third trigger, rates up plus narrowing leadership equals momentum, unwind, risk. Rates stable plus broad participation, trend continuation still has the edge. Keep that in mind because winners and losers time. This is where you see who's actually putting money where their mouth is. Keys rose 22.50% to 300.26 because Q1 earnings beat and AI-linked demand changed the narrative in one shot. Translation: buyers paid for proof, not vibes. AMD rose 9.10% to 214.51 because Meta locked a multi-year AI GPU partnership worth up to 6 GW plus warrants, and traders treated it as a scale validation moment for AMD. Translation: buyers paid for proof, not vibes. INTC rose 490% to 45.76 because Intel rode the same AI capex wave as investors chased second-order beneficiaries of hyperscaler build-outs. Translation: buyers paid for proof, not vibes. EXPD fell 7.49% to 149.63 because an earnings miss and tariff sensitivity hit the stock hard as logistics names were repriced for margin pressure. Translation: the market pulled funding from stories with execution risk. OKE fell 6.78% to 87.33 because energy stocks lagged badly in the rebound session, and ONIOK became a clean downside expression of sector pressure. Translation: the market pulled funding from stories with execution risk. MOH fell 5.77% to 156.21 because healthcare failed to catch a bid even at forward look. Here's the part that can ruin a perfectly good thesis. Tomorrow pressure point. WED, Feb 25. Conference Board Consumer Confidence. 10 hours AM ET expected 87.91. A beat could validate today's rebound. A miss risks reopening the growth scare that drove Monday's sell-off. Then, watch this. WED, Feb 25. Fed speakers, Barkin and Musalam. Dovish tone helps risk extend. Hawkish pushback could quickly tighten financial conditions in headlines. After that, into next week. WED, Feb 25. Treasury auctions, 17-week bill and 2Y FRN. Demand quality will feed directly into rates sentiment and equity valuation comfort for high-duration tech. Bull case, if the tape behaves, consumer confidence beats, and Fed comments lean dovish. Risk appetite extends and the S&P 500 presses toward the 6,950 test zone. Base case, highest probability for now. The market digests today's surge with range-bound trade near 6,850-6,900 and gradual rotation from hypergrowth tech into defensives. Bear case, if one key pillar cracks, confidence disappoints while tariff anxiety reaccelerates, volatility re-expands, and VIX jumps back above 22. Related news, but with signal. No headline soup. Rebound session. Markets snapped back after Monday's AI scare washout and an 822-point Dow drop. Software names stabilized, dip buyers returned, and the rally broadened enough to pull all three major indices into solid green territory. When panic unwind meets broad participation, short covering can extend into a multi-session move instead of a one-day bounce. Meanwhile, this policy path feeds straight into yields, then valuation multiples, then growth leadership. AMD Meta AI hardware pact reset the tape. Multi-year up to 6 GW, one of the largest AI compute commitments yet. The deal reframed competitive positioning in AI accelerators and sent AMD up more than 9% while lifting sentiment across semis and infra. Scale commitments lock in demand visibility, and visibility is exactly what equity multiples have been begging for. While everyone watches tech, softer energy pressure quietly cools inflation risk and keeps cyclicals alive. Home Depot Q4 beat, EPS 272 versus 252 expected, eased a key housing growth worry. Stronger than feared consumer-facing results offered a macro cushion and helped keep recession anxiety. Synthesis, plain English. Today's rally worked because breadth held while rates stayed civil. The market paid for evidence-backed growth and fined execution risk, so stock picking beat blind beta. If I had to bet right now, I'd lean with leadership that still has earnings air cover, hedge where estimate risk is rising, and size around the event calendar instead of candle FOMO. Earliest warning sign is simple. Leadership narrows while indices still look fine. That usually breaks late longs first. Base playbook. The market digests today's surge with range-bound trade near 6,850, 6,900, and gradual rotation from hypergrowth tech into defensives. Before we wrap, one stat genuinely reframes how durable this move might be. Process beats prediction. Define invalidation first, then let new data. Okay, this stat genuinely caught me off guard. Keysight, plus 22%. The AI test equipment play nobody saw coming. While AMD and NVIDIA grab headlines, Keysight, the company testing all those AI chips, just posted its biggest single-day gain in history. AI infrastructure spending is not just about chips. The full stack is repricing, including the test and validation layer that makes scale deployment possible. That's not just trivia. It reframes today as a participation story, not just an index-level headline. If participation holds, pullbacks are likely orderly. If this saved you 30 minutes of chart staring, hit like and subscribe. Drop a comment with the one event you want covered before tomorrow's open. Market Pulse Daily lands every market day. See you in the next one.